I have three of my bosses here today, and Aaron has four. So I'm just gonna warn. So, but I was gonna say the person probably at the Schaeffer Center who knows the most about the Affordable Care Act is Aaron, and so maybe you could give us your perspective on what the debate is about right now and where it might be headed, or open it up to however you'd like to start the discussion.
So I think there's a very important short-term debate and then a long-term or kind of bigger picture debate. And I think the bigger picture debate is fundamentally about how much do we think that the government should be involved in providing health insurance coverage to citizens of the US, and in particular, how much do we want to kind of redistribute wealth in this country, and how much do we want to guarantee access to insurance coverage and to to actually accessing healthcare kind of across the spectrum of individuals that live in this country. So I think that is kind of the fundamental underlying issue that's driving the interest in kind of turning back to healthcare reform and bringing together, or actually kind of dividing actually different factions of the government in terms of how we're going to move forward from here, and some of the fundamental issues with the legislation that was raised, the American Health Care Act and that type of thing. But that's the big picture question I think is going to continue to be an issue for a long time and perhaps forever. The short-term issue is what's coming in the next few weeks, which is fundamentally that the government needs to pass a continuing resolution to continue to be funded and operational as a government. And in addition to that, the federal government, including the administration and or Congress, needs to fundamentally make decisions about whether they're going to continue to fund some important payments to insurers called cost-sharing reduction subsidies, and whether they're going to commit to enforcing the individual mandate. And both of these things have very fundamental consequences for insurers and who's in the market, and essentially how this business or how this market's going to function this year and in the next few years. There's a lot of uncertainty being fostered by politicians right now, and it's making it very difficult for insurers to kind of commit to continuing to exist and operate and sell policies. So I think we can talk more about those issues, but.
Yeah, well, Neeraj, you've done a lot of work on the individual market. Suppose the insurers don't agree to participate, or that is that we see that in particular the government doesn't insure all the risks, and so we see a lot of exit from. Is the individual market going to implode as a result of this, or and it'll be interesting to think through the political consequences of that.
So I think the biggest issue in the individual market is adverse selection, which is basically the healthier individuals or citizens don't want to buy insurance, and the sicker, older individuals who consume more health care want to buy insurance. And if that happens, then premiums escalate, and if premiums escalate, the healthier population drops out, or the relatively healthier population drops out. Again, as a result of that, healthcare costs or premiums go up again, and so on and so forth, and the market implodes or collapses. And there is, so adverse selection is a phenomena that is not new, has existed in insurance markets for several decades, or there is, people have got their Nobel Prizes for describing this phenomena. And the solution to adverse selection, that was a question on my exam I gave recently, but I've graded the exam so I can give out the answer now, is, so there are a variety of solutions. One is mandating insurance, which is what Obamacare or the Affordable Care Act did, which is basically, in some sense, forcing younger, healthier individuals. So it's not really forcing, but it's giving them an incentive that if you don't enroll, you'll have to pay a $700 fine to the federal government. So one is mandate. The other is high-risk pools, so which is basically now going on the other side and saying, let's take the most expensive people out of the private insurance market, and let's just provide them insurance separately. And the question is, how do you fund this high-risk pool? That if you look at healthcare data, the top 2% of spenders account for 50% of spending. So if you really want to have a well-functioning high-risk pool, and you want to take out the top 1 or 2% of people, you're talking about a huge amount of government financing of healthcare for these high-risk individuals. So that's another option to do. The third option is to subsidize healthier people, which was what was again happening under Obamacare. That since so it's kind of like both a carrot and a stick. So if you don't enroll, you'll have to pay a $700 fine. But if you enroll, then the government will, depending on your income, will foot 50%, 60%, 70% of your health insurance bill. The other option was to encourage, so if you wanted to get an A+, you had to say, to insure the insurers. So that insurers are also, even though they are in the insurance industry, they're also risk averse. They don't want to be in a situation where they become bankrupt. So the Obamacare had a provision for kind of collecting some money from all the different insurers and then paying that money to insurers who were the unlucky ones who ended up with a lot of unhealthy people. And I think that program was sunsetted after a few years. Erin, is that right?
Yes.
And I think that had a consequence on whether insurers wanted to participate in this market or not, especially given that it was a new market. So I think right now there is a lot of uncertainty about what is going to happen. And I think insurers being risk averse, a lot of them might just say, we're going to wait and watch, or we'll watch our competition implode, and then we'll probably enter the market in a couple of years when things are more stable.
I did want to add one aspect to this, which I think is very interesting, which is the variation across states. So this issue came up with the cost share because the states that did not expand Medicaid, they have a greater proportion of their population in the ACA marketplace at this 100%, 150% of the poverty line. And so those individuals in those states will be more at risk of if the cost share is not fully funded going forward. And that this issue that you bring up about insurers going out of the market, there are some states that are already down to one or two insurers, and a lot of them are red states, Kentucky, Tennessee. And then there are other states where the marketplace is quite active and they're quite a functioning healthcare marketplace. So I think when we think through all of these issues, we always have to kind of keep in back of our mind that the response and how the individuals will be affected are going to vary a lot across individual states.
So I want to come back to that point, and also whether single payer and Medicare for all makes sense in light of one easy solution to get at least an A- on your exam is to say, well, we'll do one risk pool. But I want to talk about high risk.
On my exam,
I want to talk about high risk. So you mentioned that 2% account for 50%. I don't know if that's the right number or not, but it's certainly the case that it's highly skewed. But and the other part,
5%,
yeah,
something.
But the other important point of this is that any of these policies, whether you believe in public options or private options, will work if you throw enough money at the problem, okay? And so in the ACA, for example, part of the reason it worked is we threw enough money at people in terms of subsidies that the healthy people enrolled, and we threw enough money potentially to the insurers to insure their risk so they would participate. So the question is not how do you make the market, in some ways it's not how do you get it, solve it in the initial state. The question is it fiscally sustainable? So, and in the case of high risk, for example, one option we've had in the past is to say, take these people, put them in a high risk pool. It creates, the insurers no longer have an incentive to compete to avoid these people, and it's not very wasteful, and the market can function much better. Historically, when states have done that, though, the answer is that people in the high-risk pool, the insurance has gotten very expensive because the state hasn't been willing to throw in the money. The premiums get so high and the risk pool basically collapses. And so And the other part of this is if, let's say someone ends up in the high-risk pool, are they there for life? Or are they going to come out when they're doing well? And what are the incentives passed? So my question to you, there's been a lot of talk about could we use high-risk, there's been a lot of Republican talk about high-risk pools. Is that a viable alternative for policy solution here? Aaron?
I feel like I'm taking Neeraj's exam.
And then I'll tell you the right answer.
Okay. All right. So I do think it's a viable alternative or a viable solution if you fund it adequately. So I think basically, you know, as Neeraj has mentioned, this is a very small percentage of the people that are in the population who are spending a very high amount of the dollars. And insurers have worked very hard to essentially try to avoid having those people in their individual insurance products unless they're adequately compensated for having them. You kind of can't take on the risk of potentially covering all the people who have all the very high expenditures and only collecting a premium that's like the average premium in the market. You're just gonna, you know, that's not gonna work as an insurer. So I think it is a sustainable solution in terms of kind of picking off that, what we like to call the right tail of the expenditure distribution, all the people over here who make the market very difficult for all the people over here. And if you can effectively truncate them or kind of pull them out of the market, then insurers can kind of focus on making the market work for the majority of people who spend the minority of the dollars. But as you mentioned, it's a lot of money. And so you have to figure out, where's that money gonna come from? How are you gonna make sure that you're kind of aligning the incentives appropriately so that, you know, those people are still getting care, but you still have an incentive for insurers to manage their spending, to be involved in kind of being the most efficient you can in covering those people.
So just so I understand, in the Aaron Trish view of the world, Dana Goldman, who might be high risk, I'm going to get a letter from my governor saying, Dana Goldman, you're very special, and we're going to put you in a special pool, and you're no longer part of our regular insurance pool. So you don't have you're not going to be part of the USC plan anymore. We're going to put you in the California plan. But if you get better, we'll move you back. And that's your solution?
No, that's not my solution.
Okay.
So
I just want to understand.
So just 2 points to clarify on your iteration of this solution. One is we're really only talking about the individual market. So you and anybody covered by their employer-sponsored policies are not going to be pulled out of this pool.
As long as I stay employed, so I'm going to be nicer to Neeraj, Julie, and Jack.
Exactly. And I'll be nicer to all of you. No. But the second point is you don't have to do this overtly, and you may not even ever know, right? So I can just contract with your insurance company. I can be, if I'm, you know, the federal or the state regulator, you can still go enroll in the policy just like everyone else. You don't even have to be told that you're a high-risk individual. I, as the government, can work with the insurance companies and provide some kind of credible arrangement that says, when Dana spends this much money, I'm going to help subsidize that. And it's going to come out of the government's bottom line, not the insurer's bottom line. So you can do that by providing something like reinsurance, which basically says anybody who spends over $50,000 in a year or over $100,000 in a year or whatever the right kind of limit or threshold is, the federal government's going to be responsible for paying either all of the kind of spending above that or some proportion of the spending above that.
I think if you, just following what Erin is saying, that a credible or a bigger reinsurance program can effectively do what a high-risk pool is doing, right? Because you basically take the top 2% of spending out and you say this is now everyone's responsibility, not just the insurer who was unlucky to get the high spender.
And not just the individual market.
Yeah.
You can spread it much more broadly.
And
than
so
that.
this is
That usually happens at the state level, right?
But
usually, yes.
But I would make it
could
more.
happen at the state
I would
level.
make it more overt because I think it's important for people to know how much healthcare spending is. So I would send a letter to Dana and saying, Dana, you know, your healthcare costs $20,000, but because you're special, we're only going to charge you $1,000 in premium. So I think that's the way to kind of.
And please report to this detention center with your passport. That's a good idea. Yeah. Exactly.
Then I would argue we should also send a letter to everybody who's paying much more in premiums than they are expected to cost and say, thank you very much for helping fund Dana's healthcare. We love Dana. We want him to get his care. So I'm willing to spend an extra $500 a year to subsidize that. But you should send us a letter and thank us.
So what do you hope to gain by making sure everyone knows exactly what the government's paying and what they're paying?
No, I think it's just a part of like public opinion. So like when the replacement for Obamacare was being debated, they said, oh, the Republicans are taking an approach which is incentives or carrots rather than the Obamacare approach, which was basically a mandate and a penalty, which was untrue. That Obamacare, in some sense, if your premiums are higher, your subsidy is higher. But that subsidy was kind of hidden, right? And here they took the approach of giving a tax credit where you actually get a check. Versus Obamacare, the subsidy was implicit. You didn't get the check, but the government was paying thousands of dollars on your behalf for health insurance. So I think in some sense, those subsidies, if people knew how much they were getting from the government for the health insurance, would have made Obamacare more popular.
So let's assume, for the sake of argument, that your strategy of singling out people who are really sick and asking them to report to a detention center to get their insurance is not politically feasible. And let's pursue Aaron's, though, which is that it's happening as a reinsurance. And so we think about high-risk pools, and the Republicans are talking about it. My question to you, the three of you, is who was the first politician who proposed this idea?
Do you know the answer to this?
I do.
In the context of the ACA or just broadly in
Just
insurance?
broadly, as the solution of this problem is to have high-risk reinsurance. No, the answer is John Kerry. So now you're asking Donald Trump to pursue a policy that was actually proposed when John Kerry ran for president. And if this happens, I will be very excited to see. I don't think anyone realizes that this notion of making the market work using high-risk pools was actually something that Kerry did when he was running for the Democratic, well, he won the Democratic nomination, actually.
Well, it would be very fitting since Obamacare built on a Heritage Foundation proposal.
That's right. It would be. There's a certain symmetry to that.
Yeah.
And that's actually a feature, I think, of health reform generally, is that, you see they tend to co-opt the ideas of the other group and use them for different purposes. But I do want to, go ahead.
So I think another issue which we haven't talked about is payment reform. So I think what Obamacare did was kind of expanded insurance coverage, but it also changed the way we pay for healthcare through accountable care organizations and bundle payments. And I think now some of that is going, like Secretary has said that they won't do bundle payments for cardiac conditions and so on. Right. And I feel like that's also a step in the wrong direction, that you had to kind of align incentives on the private side. And I feel like in some sense, this was one of the few places where I feel the government is leading. So like Medicare implemented prospective payment for hospitals in 1983. And the private sector took several decades to follow suit. And similarly now, Medicare is the one who's experimenting with bundle payments, and now private insurers are following Medicare's example. So I think if Medicare stops innovating, it does not only has consequences for Medicare, but it has consequences for the broader healthcare
So now this will be an interesting part of the debate. You're arguing Medicare as an innovator. Medicare took 50 years to get a drug plan, and you think it's an innovative program.
Standalone drug plans did not exist in the private market before Medicare
But I
created
think the other part of it is Medicare. It is the problem with Medicare, and I agree with you on payment, and actually prospective payment was quite innovative and effective. But it's also the case that it's highly politicized. So take Medicare HMOs. I think people don't realize that about 30, what fraction of the population is? 30, Aaron will know exactly. 34% of Medicare beneficiaries are in HMOs, and the HMOs can reimburse on an episodic basis. So maybe one solution here, what I'm getting at is Paul Ryan is sitting there, and his proposal has always been, let's put everyone into competing plans, Medicare HMO-like plans, with or without a public option, and we can talk about that. But those plans can then innovate on the pricing side, and that might be one solution for allowing this innovation, other than having the regulators decide what we should do. Because where I disagree with you on the innovation side is Medicare often, at the last minute, waters down the incentives so much that it's a good idea, but then because of political pressure, it doesn't put enough skin in the game, so to say.
So actually your idea again, like that was something President Obama proposed as competitive bidding for Medicare Advantage plans.
Right.
And so I agree that I think something like that would be great. I think the difference is that, do you want to take out the public option, which is, I think Paul Ryan's version of it is kind of taking out the public option, or do you want to kind of keep the public option within the mix? And I think given the whole story on the individual market about adverse selection, if there is, in some sense, the reason I think Medicare Advantage works so well is because there is Medicare fee-for-service to absorb all the bad risks. But if you take out Medicare fee-for-service, we'll be talking about exactly the same issues. You know, some parts where the elderly don't have access to insurance because insurers are too scared, and so on. And that market will, in some sense, there it's going to be even a much higher stakes game, both for the individuals, like you don't want to be 70-year-old and not have insurance, and for the insurer, because you're talking about, you know, consumers who are much bigger spenders.
But fee-for-service is in wild need of reform. I mean, the benefit structure in your traditional Medicare fee-for-service plan is super complex. A, B, D are all treated separately. Co-payments, co-insurance, deductibles. There's not an out-of-pocket cap like you see in the free market. So, and that is an area in which both parties agree needs reform. It's just what kind of reform and who's going to bear the risk. So I agree. I mean, the Medicare Advantage has a role, but I also agree with you that the fee-for-service on its own needs reform, but we need some sort of public option, or you'll end up with a similar.
But I just want to remind you that, again, in 1980s, they passed the Medicare Catastrophic Coverage Act, and it was designed to impose an out-of-pocket maximum in Medicare. And actually, it was going to impose, it was actually the first attempt at a prescription drug plan. And what happened is Dan Rostenkowski, who was then head of the House Ways and Means, and some of you may remember this, who was instrumental in passing this, when elderly people found out that they would actually have to pay for the benefit, they were filmed chasing his limousine and throwing rocks and saying, I forget what they were saying, but it was on ABC News, Dan Rostenkowski being shot, elderly people running after his limousine and they repealed the legislation within a few weeks.
So I think what I have to say to that is, if they can run after the limousine there, they're healthy enough, they're doing well. I don't have any sympathy for them.
Should we open it up and see
well,
what kind of
not
questions?
Not yet.
If you would like to moderate, then you can do that. But that's not open for debate right now. I have a few other questions, then we will. I do want to talk about Medicare for All. You mentioned, Julie, you talked about states. We talked about public options. You talked about innovation in Medicare. Is one solution to offer to states one option being Medicare for All as an option that runs alongside others, so that we can do some experimentation to see if that actually is a viable alternative for people? Aaron?
I think that's a pretty serious political challenge to get through. I don't think there's a lot of political appetite for that, or at least
what
there
if you leave it, but you're leaving it up to the states?
So you're giving
states' rights. Don't we believe in states' rights? We do, until it's marijuana, and then suddenly there shouldn't be state rights.
So I think what we're learning, so I think Julie alluded to this before, so 21% of the population who purchase insurance through the health insurance exchanges in 2017 has access to only one insurance company offering them plans. I think another 22 or 23% have access to two. And the number of insurers participating in these exchanges has significantly fallen since 2016 and even since before. So there are plenty of examples like California where there's a ton of competition, many plans are involved. The state and covered California is very actively involved in promoting competition among these plans. But I think that there's a clear kind of issue or concern that in 2018 that we're very likely going to have areas that have no insurers who are willing to sell policies. So over the past couple of years, there have been examples where the single remaining insurer has pulled out of the market and the kind of state regulators or the federal government, somebody has been able to call in favors from other plans in the area and convince them to sell a policy. So we haven't reached a point where there's been markets with 0 plans. But I think that this coming year, it's very likely that would be the case. So there's going to be some area that has no insurer that's willing to offer a plan. And then you're left with a very huge void. What do? The Affordable Care Act didn't write in any kind of fallback option. So I mentioned on the walk over here, now I'm just going to sound really nerdy, reading the Medicare Modernization Act this weekend, which is the legislation that created Medicare Part D. And in that legislation, they were creating standalone prescription drug products for seniors, a product that never existed before, a market that never existed before. Plenty of political critics who said, this isn't going to work. No insurers are going to want to sell policies in this market. So the legislation includes language very specifically for the government to intervene and create fallback plans, specifically because of kind of the politics of the time. It was not allowed to be a publicly run option, and it was not allowed to be run by the federal government, and in fact, it wasn't even allowed to be a national plan. They had very specific rules about working with the private market to make this happen. But it's in the legislation to call on Congress to swoop in and fix and kind of pick up the pieces if this market fell apart. So there's nothing like that in the Affordable Care Act, and I think that is going to potentially be a pretty serious concern as we start to see insurers file rates, and it's going to perhaps re-engage the debate to give something like a public option to kind of be able to bolster this market or continue to see it operating, or to facilitate its continued existence. I think the other really big point about a public option, especially if you base it on a Medicare program and let people buy into Medicare, there's a very serious divide in how different payers in the US pay providers. Private insurers pay providers significantly more than what Medicare pays providers. And so I think if you let Medicare be an option, you're going to see a very different kind of provider reimbursement structure, and that could result in very different premiums. That could be a good thing or that could be a bad thing, but that's a pretty unlevel playing field if you have that kind of competition. And I think that that's kind of an issue that needs to be
How are the providers, the doctors, the hospital systems and the like, what do they think of the Medicare option running, the public option? What has been their official position on this? Anyone know?
I don't know if they have taken an official position.
But I don't know if they've taken an official position, but I think I agree that if you want to give more power to the states to decide how they want to organize healthcare, I think in principle, I don't see anything wrong with it. And you can argue that, different states have different markets. Like in a small state, you might want to have Medicare for all because it's a small market. It's not a market where you can have a thriving private insurance industry. In other states, maybe you want to have, a thriving private insurance industry. The other thing is it also depends on, like, some states maybe don't want to invest a lot in healthcare and they have other priorities, and if they want to do that, they should have the right to do that. And
I think that's somewhat controversial, right?
I think it's, I guess it's because I think it also leads to more ownership. That right now a lot of what happens is if someone in your state doesn't have good healthcare, you blame the federal government for it. But if you're actually responsible for providing healthcare to people in your state, and it's very clear that the federal policy has devolved power to the states, I think they'll be more responsible because there'll be a consequence for that.
I mean, I don't know that we actually have seen that. So we've had states that have had the option to expand, and they chose not to. And now you're in a situation where we have extreme inequality across many different areas across the country. So I'm going to go back to Aaron's original statement at the beginning. These are big issues in the long term, and the sort of how we want to think about whether people should have equal access. And just because I was born in Kentucky or Tennessee, should I somehow not have the same options for healthcare as someone who was born in California?
Because I think these markets are different, and maybe you should allow states to experiment. And I think based on this discussion, it's not clear that we've figured out a clear solution to the healthcare problem. So in that sense, having different states experiment, and maybe over time, 2 or 3 models will emerge that make sense for large versus small states or whatever it is, and that might be a way. Like, Massachusetts has, close to universal coverage, and they seem to be doing fine. So maybe other states will come up with, their own models.
So I'm all for promoting state innovation and I think many states can do I think California can probably do a much better job at managing California's insurance market than the federal government can. But I do think that there's some need for some kind of like no state left behind situation for the states that their idea of innovation is do nothing. And that's a tough situation for the
we have that
constituents.
already. It's called the safety net and Medicaid. And we did that. We made that decision already. I mean, the problem people always have, everyone always says, I believe in state right until a state does something they don't like. And then they say, you know what, we need a federal decision on education. We need a federal decision. Part of having states' rights is some states will actually choose things that are different than others. There'll be more. The nice thing about the United States is that labor is mobile and people can vote with their feet, And so one thing that keeps California, a lot of people in California believe that the optimal tax rate is 100% because they can spend the money better than anyone else. The only thing that's keeping them from doing that is Nevada, because Nevada, they believe it's 0. And so California comes out with 13.3 because that keeps enough people here combined with the weather. But having some competition between states is not necessarily a bad thing.
Well, I'm not sure that your analogy of people can vote with their feet and just walk out of Kentucky and into a state with better health care. I mean, health care is a particular issue. I agree on many things. You want to let the states decide, but maybe not in health care.
Well, that's why we have, and Medicaid in some sense is a voluntary program for states, but federal government pays a large fraction of it. It gives an incentive, and every state does it. It's a question of how. But you are absolutely right that one of the reasons why and then we're going to open it up to the audience. Don't worry. One of the reasons why the ACA has been a little less expensive than we thought is because it turns out Medicaid is a very cheap health care option. And there are no copays or very modest copays in Medicaid, but they pay their providers nothing. It's very hard to get access, and they ration care not with copays or dollars, but by the fact that you have to wait in an ER for 12 hours sometimes if you want to get your blood pressure checked. But it is the case that it had allowed the ACA to expand quite a bit, and the states that did not take advantage of that as a result have much higher rates of uninsurance still. And so the question, do we expand these public options that are cheaper versus these private options that historically we haven't gotten as much savings as we would like is the important one. So that's sort of the last word, but we'll open it up to questions now.
Speaking of Medicaid, so it looks like most of the people that enrolled in California were in Medicaid, not in the exchange. And when you look at the Republican proposals for capping it, everybody said, well, it's going to be bad because if healthcare costs continue to go up and the caps aren't going to stay, then we're just going to shift those costs down to the state. I'm not necessarily think that's a bad thing if we can do that in a way that can create opportunities for innovation. Because I think that there is a lot of ways, particularly in the Medicaid system, I see. I mean, I know you're right, Dana, that the reimbursements are really low. But there's also, I think, some opportunities for innovation. I mean, most of the people who came in to the Medicaid program enrolled in Kaiser Medicaid. Mm-hmm. And there's a lot of good stuff going on in that
That's
plan.
true. Mm-hmm.
Yeah. And Molina is another one. So I think there's some opportunities for innovation, for cost savings, to improve quality.
Mm-hmm.
And I don't think we should be afraid. Maybe it's through the public option. I don't know if that's a good point to think about it, but I think we should really take advantage of that.
And it's an important point. California probably benefited more from the ACA than any other state. We have about 1.6 or 2 million people who were the individual markets working. The Medicaid expansion was early and a big success, and we dropped our uninsurance rate more probably than any other state. So the economy that's going to get hurt the most from this is us, actually. Anyone want to comment on what Mike said, or?
I think, like, as long as the block grants can kind of keep pace with medical inflation, I think that's fine. But I worry about, and I agree that, some cost pressure leads to more incentives for innovation, so maybe pushing more people into managed care and so on. But I worry about, like, especially in a state like California, if the block grants don't keep up, then basically my state taxes are going to increase, because as a state we would want to invest more in healthcare. So in that sense, that pressure might not be there if there's another source of money till the time we hit the 100% tax.
And then he's going to move to UNLV. Remember that, Jack. When the tax rate goes to 35% to pay for all the health care. Other questions? Dowell?
So this has been a very polite discussion about how to balance who pays and who gets the benefits. But I think it's really unstated parameters of ethics. And there's been some really great examples recently. We all know, in fact, on campus we're going to have a speaker, a new professor, talking about the rising death rate among whites. And we protect life at all costs, right? And then we socialize that cost in an insurance pool, so somebody else pays for all that. But what if we don't? What's the consequences of letting the death rate rise? Maybe we should simulate that and show this to people who believe in, sanctity of life, the right to life crowd. They have to see that. Maybe they have to see the trade-offs more. And I just point out that as we try to rationalize the system and make it more efficient, I have to raise the dreaded United Airlines example that eventually you start bumping people off. But maybe we should simulate that and see, and who's going to be accountable for that.
Well, the first thing I'll say, though, is you're absolutely right that the government has not taken the view, how do we improve population health? They've taken the view, how do we get everyone health insurance coverage? And, for example, tobacco is still a legal substance, even though it kills maybe 300,000 Americans a year or something like that. Why is tobacco legal? It's because there's a lot of state taxes associated with it. It keeps Social Security costs down. Tobacco actually saves the government a ton of money. And people know this. And, they say, well, it increases healthcare costs. Well, that doesn't matter. It saves Social Security trillions. And so the people most addicted to tobacco are legislators. And so I do think there is this question, and I'll put it to the group, but I will say, if your policy is how do we improve population health, then you might have said, I don't want, and it's actually related to what Mike was talking about as well. You might have said it's not about giving people insurance, it's about giving people education, for example. We know the well-educated, there's a 14-year difference in life expectancy between well-educated white males and black males that don't finish high school. 14 years, that's like the difference between Estonia and Sweden. And, there's nothing in healthcare that adds 14 years. But education, if it can solve some of that gap, then that's quite dramatic. So the point is that I think what your question is if we really care about population health and we really care about disparities, where should we be making our investments, and is health insurance the right strategy for doing that?
I think we should be making our investments in primary care and in incentivizing primary care doctors about population health. So there are a lot of countries which do that, and you can see that they're successful at that, that despite their, if you look more globally, despite their lower resources, they have much higher life expectancy and so on. So I think that's where...
But they have similar disparities. So like if you look in the UK with a national health system, it's still the case that someone in the high SES group has a much better life expectancy than someone in the low SES.
But in some sense, saying the solution to healthcare is educate people more is just like, now how do you educate more people? It's not like that's an easy problem to solve. That
But the question doesn't have to be, do you give everyone health insurance, or do you invest in their education? Because the issues with our healthcare spending are not around that people have health insurance and we're spending a lot to give them health insurance. It's how we're spending those dollars. So the end-of-life care, the things that we do that are extremely expensive to prolong life. I mean, so I don't think that the questions are really about, should we invest in education or make sure everyone has health insurance? It's maybe everyone should have health insurance. We should invest more in education, but we should think about how we're spending the healthcare dollars and at what time of life. So Neeraj's point is like prevention, and maybe in early childhood is where we should spend the healthcare dollars.
I don't think health insurance, we are being recorded, right? Has it anything to do with access to healthcare? I think it's all about financial protection. I mean, I think that financial protection.
But why do you do it then? I mean,
well, right. So I mean, you do it for
protect people another way.
we could not spend it, and that would be financial protection. The answer is that the evidence shows that for chronic illness, we know that you can really improve health. But this is about population health, and it's a broader question about that. And I want to say that, we could say it is true that at every level of government, this is being recorded or it's not, or sometimes I say the opposite, but at every level of government,
you're not alone.
Healthcare is crowding out spending on other social issues. So you think about pre-K, it's 100, the stuff, Jim Heckman, who's part of the Price School and the Nobel laureate who works on early childhood education, he shows that if you spend $100,000 on early childhood education, it pays a 6-to-1 return over a lifetime, including in better health measured at age 35. If you look at people's blood pressure, if you look at people's level of cholesterol, you can actually see improvements. So we could spend that $100,000 on early childhood education and improve health. But there's no way, I think, in this climate that any state could make that investment right now. So I think it's a fair question. Are we making the right investments if we care about population health? I mean,
you also have to be willing to then say when they're 35, where you can't have, or no one's going to help you pay for that treatment. You can have it, but you've got to pay for it with your increased income that you got from your increased education. So that's a pretty tough statement to make politically, too.
Any other questions?
I want to come back to this question of sustainability, because my understanding is that if we continue to spend on healthcare at the rate that we have been, that and as the baby boom retires, that it will overwhelm the federal government's budget. And so whether we do it one way or another to pay for this high-risk pool, or what is the alternative to bankrupting the healthcare budget or even the general budget of the federal government, or does that matter over time, that we just have a ballooning larger and larger deficit?
So I just I'll pose this to the group, but I'll just say Ben Bernanke famously said, the United States is a health insurer that has an army. And so, to give you some sense of the magnitude, we spend about $1.4 trillion in federal dollars on the military, healthcare, and interest. And so everything else we talk about is irrelevant. So this issue of sustainability is an important one. And historically, the way we've dealt with this is we clamp down on provider payments and we clamp down on access. And that's how we limit the federal government's portion. In fact, again, I'll go back to the 80s when the Reagan era happened, budgets were out of control because Medicaid budgets were growing. And so the way they did it is they reduced eligibility and they reduced provider payments. And it got the budgets under control, but at the expense of providing people access. So what do we do so we can get out of this equilibrium where we're just going to make Medicare? One solution is to make Medicare look like Medicaid. You know, limit access. Medicare everyone loves right now because every doctor takes it. But it could be the case where doctors stop taking Medicare because it's not as generous. And that would help with the fiscal projections, but at the expense of taking away the universality. So what do we do?
I think what we need to do is like innovate on the supply side. So I don't think like, when I make my healthcare decisions, I actually don't make any of my healthcare decisions. It's my doctor who makes the decisions. So if you can actually incentivize doctors to make the right decisions for patients, you can save a lot of money and you can actually have patients living longer or healthier or higher quality of life. But I think right now, there is little incentive for doctors to be the perfect agents for their patients. So they don't counsel patients on end-of-life care where that spending might be wasteful, or it's about just maybe a cultural change. The doctors always want to give hope to the patients, irrespective of whether it costs $5 million or $10 million, and maybe some of it is. I think if you give them the right incentives, it will slowly lead to a change in the culture, and it will lead to a change in the conversations. And I think we can have lower spending or spending on the right things and still have it be sustainable.
I completely agree with that. But I also want to add, maybe historically we've kind of cut access, but I think more recently, rather than cut access, the conversation is just shifting the risk and who pays for it. And so more and more, we're just shifting it onto individuals, figuring out a way to kind of subsidize and help those who can't pay, and those who can take on more and more of the cost sharing. And you see that across many different programs, and I think Medicare is one of those that we're going to see more and more of shifting of the costs onto individuals.
But
not through.
I'll let Aaron answer this, but I'm going to, so coming back, so what Jack's question really, Jack is proposing the following solution. He's saying that at age, this is being recorded now, at age 65, we are telling people we are going to spend $200,000 in present value on your health care. Why don't we, what Jack is saying is maybe we should say to those people, you know what, we're going to spend $100,000 on a bare bones policy to make sure if you're really sick, you get coverage to take care of the financial risk. And with that other $100,000, you do whatever you want with it. Or maybe we take it back in the government and we spend it on early childhood. Or we make it different, we buy more ships because we know we need more ships.
Well, it has to be less than 100. I mean, then you're just netting out at equal rates.
But my point is, my point though is, have we overinsured the elderly and provided too much service, and that way we get, and I will personalize this.
But it's on the other end, right? That suppose you do this, what will happen is you'll end up in the ICU, and then you'll again cost millions of dollars. So if you want to think about this rationally, you have to kind of incentivize them to seek primary care so that they don't end up in the ICU. Or if they end up in the ICU, they say, it's time for me to go away, or, I don't have to spend $10 million on, making my mom or my dad or whoever live 2 more days. There is a startling statistic that 85% or a very high fraction of people die in hospitals, according to Emmett Keeler. Right? And this wasn't the case, 50 years ago. So I think now it's culturally and if you're in the hospital, you can make anyone live as long as you want. You can put them on life support. So I think part of it is having the change in conversation. That's where a lot of the spending occurs, where it's not fruitful. Like if you'd said, let me take those same dollars and invest in early childhood education, I think that's a great idea. But no one wants to talk about this difficult conversation that, we're spending too much money on ICUs. We're making people live longer just because we can, not because it's a smart thing to do.
I mean, Paul Ryan's suggestion is let's just increase Medicare age from 65 to 67. Well, I mean, we've done at the Schaeffer Center simulations of it. The 65-year-olds are not the high, expenditure people. That doesn't save anyone anything.
Isn't it the case that every other industrial country has what I'll just call a global health budget? That's true in Germany and everywhere except in the United States. And what we want is our cake and eat it too. We want to be able to get as much health insurance as we can possibly have at any stage of our life, and we don't want to be put in queues to be able to get it. But we also want to spend, within a reasonable amount. We don't want it to be too expensive. And those two things are probably incompatible.
That's right.
I mean, at some point, if you go forward, there has to be rationing of healthcare in some other way just besides price. Or you have to do what Neeraj is suggesting. You have to create a situation where prices, people can actually make decisions around price that are efficient for themselves and for others, which isn't currently the case because somebody else is paying and you don't know what the price is, et cetera. But there, one way or another, isn't it almost inevitable that one of those two things has to happen? Because otherwise, the country's budget is really going to go bankrupt.
Yeah, and I'll tell you what I think the answer is. I agree with you, and actually the problem is we've offered too much insurance at the end of life and not enough insurance and investment early in life. And the right answer, I think, is to have a bare bones Medicare policy that, by the way, has death panels, so it won't cover shit that isn't worth it. And and if you want to buy the extra stuff, though, you can buy that insurance, and people do want that, but you don't get to use tax-preferred dollars in order to purchase it. And that's my own view.
Objection.
We're going to destroy the tape afterwards.
Yeah, you're going to have
a
to.
market-based solution here. So rather than a death panel, why don't we offer rebates? So we have computers. We could do projections. So here's what we're going to do for you in the ICU. We're going to give you 3 more days at this expense. However, we could arrange a rebate of 20% to your family if you agree to let us bump you off the plane.
But that's what I said was the Jack thing. That's what I said was the Jack solution. So, for example, consider the no, my point, though, is...
And Grandma would do that for her family. She would do that.
But, Dao, my point is the following. You could say to people, here are 2 plans. There's traditional Medicare, heroic measures, not much intervention. Guess what? We're going to offer also a Kaiser option, which is we're not going to do stuff unless it's medically necessary. We're going to do it appropriately. But we're going to offer this, and it's going to be a cheaper alternative, and you can keep the cash. Okay? And my point is, right now, we make everyone over-insure. And some people want to buy that. And what the actuality of it is that we need to get to that. Jack's point is we got to get to that sustainable. We can't keep doing the Medicare, do everything model and pay everything.
He knows the demographics. He's right.
Yeah, exactly. That's right.
And I think in some sense, rather than have people ration their own care, so grandma making the decision about what to do, the way to do it is to give incentives to your primary care doctors to ration your care. So that if your doctor advises you, hey, Neeraj, you don't need to be in the ICU. For you, going to hospice is actually going to be a better option. It's going to increase your quality of life. That's, so if you can incentivize doctors to do that, and you can call it a death panel or whatever you want to call it, I think that's the way it works. Because we've seen, like in my research on high deductible health plans, you give people skin in the game, it doesn't make them smarter. Because what makes, like, doctors make the decisions. You always kind of delegate your healthcare decision to your doctor. So if you give them the right incentives, and that's why Kaiser works, because there the doctors have the right incentives. It's not that their people in Kaiser are smarter, it's the doctors in Kaiser have the right incentives, and that's why they can make better or smarter healthcare decisions.
So we're going to give Julie and Aaron the last 2 words in that order. Aaron, you get the last word.
So I think so another part of Paul Ryan's plan is that you do this through just capping what the federal government will pay through a defined contribution or a voucher type program, and you still involve private health insurance plans for Medicare beneficiaries. Perhaps one of them is the federal government, but that you just fundamentally recognize we don't have enough money to keep paying out what we're paying now, so here's how much we're going to pay per year. And there have to be some parameters around private health insurance companies being able to limit what types of services they have to kind of be on the hook for. It's a tough, thing to tell seniors. It's a tough sell, but I think you're right that the trajectory of just spending more is not sustainable. Do I get to make one more point, or no?
I was going to say that's the right answer, but.
Yeah, but no, so.
You should stop there.
No, but I do have one more point, which is that everybody talked about.
This is the problem. Everyone always wants to go a little further. Go ahead.
Everybody talked about how much we've done on price controls, that's been our solution, but that's really not the case in the private market. And we're spending a lot on the private side of the market, and we're foregoing a lot of tax revenues by making this an employer or a tax-exempt benefit employer-sponsored health insurance. And that is a big issue that needs to be addressed.
So just to summarize for the cameras, Paul Ryan has it right?
No.
No. On both accounts.
Alice Rivlin has it right, actually.
I can't summarize that in
The
one
point
sentence.
is, one way out of this is to have managed competition with insurers offering packages of benefits and doing it in a way that people have to pay the marginal dollar if they want extra services. And they do that without tax advantages and without public subsidies unless they're poor.
Right, but I think that last point is very key because there's a huge equity issue involved in that kind of setup, right, that the rich can always pay for.
Well, no one here except for Neeraj wants to dismantle the safety net, but we'll leave it at that. Thank you all very much.